Hey guys, Joseph Henson here with Henson CPA Group. And this week we are going to go through a topic that a lot of people have had questions about, especially around tax time, and that is Cash Flow 101. How smart cash flow management can drive your clinic's success. So, understanding cash flow is really just moving money in and out of your practice. There's a difference between what cash flow is and what profit is, and the profit's going to be your revenue, so what you bring in minus your expenses. Just on that side, the cash flow is the actual money available to pay bills, employees, and invest in the clinic. Common cash flow challenges in veterinary practices that most people generally see are delayed client payments and insurance reimbursements, high overhead costs, including payroll and inventory, unexpected expenses such as equipment repairs or medical supply shortages, and seasonal variations in pet care demand. So with the delayed client payments and insurance reimbursements, a lot of clinics have started going to more of a care credit or scratch pay type model where they're not doing a lot of receivables because of the fact that they have a high rate of uncollectability and they don't want to have that cash flow obstacle on their books. With overhead costs, you can just expect payroll to be anywhere from 30 to 50% of your clinic's expenses. Inventory, this is something that we talked about before, it's what's on hand at all times. You're going to have points where you have inventory spoilage, you have inventory that's just going stale, but it is something that you've paid for, but you're not seeing that on the profit and loss. It's more on the balance sheet until it's used. The unexpected expenses, such as equipment repairs or medical supply shortages, these are things that happen. You have a piece of equipment break periodically, and you have to get that repaired. If your X-ray machine breaks, it's going to cost thousands, tens of thousands of dollars to get a new one. So you're going to see if you can't repair that for less. It's still unexpected, and not having cash flow on hand, that can hinder your ability to actually make money if you don't figure out a way to fix it. And then everyone knows seasonal variations. Winter months are going to be rough, but you really can plan for those to help kind of smooth out those periods of uncertainty. Maintaining a steady cash flow. There's a few areas you can really look at doing this. It's streamlined billing and payment collections. Having a good accounts receivable department that can help you will streamline the fact that, hey, let's get this money in. And then on that opposite side, having a payable who's taking advantage of different terms your vendors are offering you, whether that's net 10, where you're getting a 10%, a discount if you pay within 10 days. Those are huge. Implement consistent invoicing and follow-up procedures. So if you aren't using something like Care Credit or Scratch Pay, and you are invoicing folks, make sure that they understand they only have so long before they are unable to pay that bill without accruing interest. The faster they get that paid, the better it is for you. Offer flexible payment options for clients. Most clinics nowadays do offer cash, credit, or some sort of pay later. There's a lot of options out there that take a lot of the risk off of the clinic and the owners itself and puts that onto someone else, just like a credit card. So if your clients are able to take advantage of those, it helps you. Like I said, Scratch Pay, Care Credit. These are different ones that a lot of people use nowadays, especially if they have an emergency surgery or emergency appointment to help save their pets' lives. Monitor expenses and control overhead costs. You need to see what is happening in your books. You need to know what's on your P&L. If you're not paying attention to that on a monthly basis and you don't realize your electric bill jumped 30% over the winter months and they went from $1,000 a month to $1,300 a month, that's a huge increase. And that's something that you have to be able to monitor so you can see these fluctuations and you can plan for them. The more time in business, the better data you have that can help with this. So if you look at this year and you notice some odd expenses in travel, meals, and entertainment, these are the ones that, hey, we spent a couple, thousand here, but this year all of a sudden it's jumped up to $10,000, $20,000, $30,000. You need to get those under control. And having historical data to do that makes all the difference. Utilize technology to track cash flow in real time. You have the ability to see what's in your bank at all times. Now, with that, you need to know what is going to be collected in the next 10, 15, and 30 days and what bills you have coming up. There is technology out there that can plug directly into your books and your bank that will say, hey, here's the cash flow forecast for the next 60, 90, 120 days. Utilize that. Make sure you see what these are. Even that means that, hey, we know we have bonuses coming up. It's the end of the year. You need to account for that because that is a cash flow hit. Build relationships with vendors for better payment terms. Sometimes it makes sense to pay a bill early if you're going to get a substantial discount. And by substantial, in this world, really, if you're getting a 3 to 5% discount to pay early, you're doing pretty good. You want those terms because it's sometimes better to pay this, but also know if you pay it within the normal time, you still owe all of it, but you don't have the risk of having a cash flow shortage. So it's all about playing the game of where's my cash out now and how much does this discount help me? Encourage upfront payments and deposits for services. If someone has a surgery coming up that is not an emergency, so say they are going to spay or neuter their cat or dog, they can plan this out. You know how much this costs, and they're putting it out there for 30 days, 60 days, 45 days, whatever that is. You can request a deposit of 50% upfront and just say, hey, this will go towards your final bill. And they will then know that if I'm charging $750 for a spay or neuter, then I owe $375 now. And on the day of the service, I'm going to pay another $375. That will help you and also help your clients by giving them that flexible opportunity to make that in installments. What to do when cash flow is low? You always have to be able to identify the root cause. Are payments coming in slowly? Are your expenses higher than expected? Were there any unexpected expenses that should have been able to be predicted, such as repairs and maintenance, or having to replace an expensive piece of equipment? These are areas you should start by looking at. And again, look at this year versus the prior 2 to 3 years. Having to replace equipment is not a surprise to most people, but it does happen. You can plan to replace a $30,000 piece of equipment just by putting a little back every month. Negotiate payment terms with suppliers. This I mentioned just a minute ago. If you're able to get a better term by paying it early, take advantage of that. See what your suppliers have so that you can take advantage of the fact that, hey, I'm going to get a 3 to 5% discount on this. Instead of $100, it's going to cost me $95. Over time, that does add up. Adjust your pricing strategies or introduce new revenue streams. If you watch my previous videos, you're going to see that we've brought up several revenue streams, whether that's telehealth, introducing grooming or boarding into your clinic. These are areas that can help you weather the seasonality of businesses, because in the winter months, if you're slower on the routine care and maintenance of seeing patients, grooming or boarding might be able to way to supplement your income, and you know it's going to happen. People want to go away for holidays. So if you have the ability to board the pet there, that is something that folks appreciate. And if you already have a relationship with them and you see their cat, their dog, typically their dog, cats do what they want, but their dog anyway, they will feel more comfortable coming to you to board them for 3 to 5 days. Optimize inventory management to avoid overstocking. You don't want too much inventory on hand. These items can be cost prohibitive and extremely expensive to maintain. You don't want spoilage. You want to make sure that you have enough to always make it to your next delivery plus some. But if you're noticing that inventory is on hand for 45, 60, 75, 90 days, you need to start looking at how can we get this down? How can we get our average inventory down to 30 days? That is a way that you can really optimize your cash flow and not have spoilage and lost revenue. Reduce non-essential spending and reassess expenses. If you are spending on a lot of items that just don't add value to the clinic, meals and entertainment is a really good one, then you can look at ways to reduce that. Maybe you pay for all of your doctors to go to continuing education. And in prior years, this has been great. It's a really good way to take a small trip while also learning and getting those continuing education credits that you have to have. Maybe this year it's let's see what it looks like to pay for a continuing education, but more of an in-house or some online continuing education. These are areas you have to be able to reassess, and you have to understand this is going to happen. Consider alternative financing options such as a short-term loan. If you're truly in a spot where you need more cash on hand, short-term financing is not the end of the world. You always want to look at the terms though. I've seen some of these with interest rates up to 100%. There's no way out. There's a prepayment penalty, but it is a way. If you can get a good one, you might have to pay 20% interest, which is terrible. It's atrocious, but it's better than having to close your clinic. You need to be aware of these and also look for them and understand the terms that come to you. The importance of cash flow forecasting. There's a lot to this. It's going to help you anticipate cash shortages before they happen. It will allow for better decision making for investments and expenses. This will give you a roadmap for financial stability within your clinic. It will support strategic business growth and expansion plans. If you're looking at growing your clinic in the next 3 to 5 years, the best time to start planning is today. If you're looking at growing your clinic and expanding to a new location in the next 6 months and you haven't started planning, it's not too late, but you have to understand the implications of that and what your cash flow is going to look like typically for 3 to 6 months after opening a new clinic. Are you taking a revenue reduction at the current one because you're leaving, or you have to hire a temporary veterinarian? These are things you have to take into account. It will help you with tax planning and compliance. There are a lot of things you can do to mitigate your tax burden. Now, this is going to be things that take cash on hand, so it will not ever feel good. But if you're able to do it correctly, your cash flow won't be an issue. Ensure payroll and vendor obligations are met on time. You can't risk not paying your employees. You can't risk not paying your vendors unless you have terms with them already to delay those and they know that's happening. Your employees, if you don't pay them, they're not going to come work for you. They just have to go get another job. They have families, they have bills. You can't take that chance. Not paying your vendors or not paying them at a way they feel is acceptable will limit the amount of inventory you have because they will not give you as favorable terms. If they do, you might have to prepay. So these are areas that are going to help you in the long term by staying on top of them. How a CPA can help with cash flow forecasting. One of the things we like to do is analyze past cash flow trends. This is something that I've already talked about where we look at the prior 2 to 3 years to see what happens. Are there times when your cash flow is actually burning? So you are in an area of less cash on hand than you have to pay for bills. This is something that we really like to look at. It helps us build a detailed cash flow projection to see what the next 12 to 36 months look like. That way we can see those areas and start to adjust. If in the spring you see an increase of cash on hand by $15,000, but in the fall you see a net decrease of $12,000, we need to start planning for that and say, let's put $12,000 away. Yes, that only leaves you $3,000 extra cash on hand, but it's still better. This way we know we can start to plan and mitigate any chance of failure to pay your employees or failure to pay yourself. Identify seasonal fluctuations. This goes right into what I was just talking about. You have to be able to look at your books and say, this is the slow period. We know it's going to happen. We never have a plan this year that changes. Provide strategies to improve cash reserves. The best way to have positive cash flow is to always have excess cash reserves just in case it does happen. A $50,000 unexpected expense hurts a lot less when you have $75,000 in the bank in reserves. The CPA should be offering you guidance on reducing your expenses and increasing revenue. There is only so much that can be cut. Sometimes it truly is about increasing your revenue and having the right CPA be able to say, look, you have 3 extra exam rooms you're not currently utilizing. Let's look at hiring you another veterinarian. Let's get another associate in there, see if you need a couple of vet techs, but that's going to temporarily hurt your cash flow. So we can plan for that. That might be that we need to look at short-term financing, like I said. But ultimately, if you have the capacity, if you are a single practice doctor or even a 2-practice clinic, then you need to understand that expanding can hurt temporarily, because you have to take a little bit less in order to bring them on. But ultimately, you should see a payback within 3 to 6 months if done correctly. And one of the other things this really does, having a CPA do this, is going to help veterinary clinics make informed financial decisions. You can't just throw a shot in the dark and hope that it's going to stick where you want it to. You need a plan. Without a plan, you're flying blind and you're going to be lucky to hit anything. Setting up systems for better cash management. Automating invoicing and payment reminders. Most bills are due around the same time every month, on the 10th, on the 15th, on the 20th, on the last day. You know when this is happening. Having an automatic system that allows you to schedule these reminders, let your office manager help schedule these reminders, is going to save you from having bills slip through. Implement a cloud-based accounting software. You should be able to look at your books today and know what had happened last week. You shouldn't have to wait for your accountant to come to you and say, hey, did you know you had a $30,000 loss last year? You should already know this. And having a cloud-based software allows you to log in wherever you are to see what's been happening. Create a budget and sticking to it. Creating a budget and not utilizing it is one of the worst things you can do in business. If you say that this year we plan to grow by 10% on our net revenue after all of our expenses, great. What are you doing to do that? Well, we're going to cut these different expenses to do that. Oh, but now you're 30% over in this area. You're never going to be able to stick to that budget. Unless you are actually being diligent with that, it won't happen. Setting up cash reserves for emergencies. 3 months in the bank. That is what you should strive for. If you don't have 3 months, get 1 month and then build on it. Emergencies are a lot less disruptive when you have that cash reserve. And I know I've heard a lot, but I can't even get a week. You can. Sometimes it's about knowing where you're at and where the cash flow holes are. You need to be able to anticipate the needs of the clinic, and without looking at your numbers, that won't happen. Establish internal controls to prevent fraud and errors. The person writing the checks should not be the person who is also signing them, unless that is you as the owner. The person writing the check should not be reconciling the bank accounts. These are certain things you have to put in place to prevent the fraud. You need to have someone who is reconciling your daily cash to the books, because without that, it makes it way too easy for someone to start to skim a little off the top. If someone comes in and pays $500 in cash and it's not recorded properly, or you don't know, hey, why was our deposit $500 short or $50 short? Maybe they say, well, it's only $50, no one will notice. Without someone actually verifying the daily cash balance, you're setting yourself up for fraud. Training staff on cash flow best practices. Cash flow is a beast of its own. Everyone wants to look at their income statement and say, well, I made $120,000 last year. I just don't see it in the bank. Yes, you're not going to see that in the bank. We need to make sure that your staff understands just because they process $10,000 in payments today does not mean you made $10,000 today. Case study on how proper cash flow management saved a veterinary clinic. So we had a mid-sized veterinary clinic come to us, struggling with cash flow issues due to delayed insurance reimbursements and rising operational costs. They were having difficulty meeting payroll obligations, and vendors were tightening payment terms. They went from 30-day terms with some of them to 10-day terms to prepayment on several. So what challenges were faced? They had late payments from pet owners and insurers, which created gaps in cash flow. They were being too lenient with their clients, saying it's not a big deal if you don't get this to us immediately. It happens, especially with smaller clinics. They understand people are in a tight spot, but it also creates a tight spot for them. They had a high inventory cost for medical supplies and prescription medications. They had not ever actually negotiated their rates. They hadn't tried. They didn't think they could. Unexpected equipment repairs added financial strain. At this time, they had an ultrasound machine that broke, and it was older, and they didn't plan on how to replace that ever. They just said, it always works. What do we need to do with that? So there were some steps that we were able to take to help them. One of those things was implementing a structured invoicing and payment collection system. We actually used a system called Bill. and it allowed us to see when their bills were coming up and make sure those were getting pushed to the appropriate people to pay that. We analyzed their expense patterns and identified cost-cutting opportunities. One of the big ones, which saved them tens of thousands of dollars a year, was their credit card processing fees. Those are negotiable. If you're paying 3.54% in credit card processing fee, you can negotiate that rate down, especially if you're doing seven figures worth of processing on credit cards. We created a rolling cash flow forecast to anticipate shortfalls. We know what comes in for the next 30 days. You can look at last year and the year before and get an idea of what's truly happening. Creating a rolling cash flow will help you. Along with that, we helped to negotiate better payment terms with vendors to improve cash flow. We were able to actually secure them a little bit more leniency because we talked to those vendors and said, look, here's the thing. Here's where they're at. They didn't have these systems in place. Here's the process that they went through to implement. A lot of their reps are understanding. They've seen this happen. So we reduced outstanding accounts receivable by 30% just by constantly following up and making sure that payment was collected in advance. We improved cash reserves, ensuring timely payroll and operational stability, and enhanced financial planning, allowing the clinic to invest in new technology and services. This was a clinic that had been around for over a decade and thought that what they were doing was what they always had to do. There's never too late of a time to change unless you close your clinic. Really, there were a lot of lessons that were learned throughout this for not just us, but also the client. Proactive cash flow management prevents crises before they arise. Partnering with a CPA was able to provide them with clarity on their financial health and strategic planning, and it actually gave them a goal. A lot of folks feel that they're flying blind, and that makes it so hard in this industry because if you don't know the next time you're able to pay yourself, it really starts to have a burnout effect. Small adjustments in billing, expense control, and forecasting led to significant improvements. Well, as always, thank you guys. My name is Joseph Henson. I work with Henson CPA Group. And if you ever have a question, please feel free to email me at joseph